Hi, today I wanted to share some information regarding something that's been in the news lately, and that's the idea of a 50-year mortgage. The current administration has proposed potentially offering a 50-year mortgage as a way of making housing more affordable. And the initial thought is that by stretching out the amortization, you're going to make the payments lower, therefore making the house payment less, making housing more affordable. And in theory, that all sounds good and should work. However, I think when you start looking at the numbers a little deeper, this isn't maybe the best idea. At least in my opinion, it's not something that I would necessarily recommend or get fully behind. So let me just give you some examples here to put some numbers to it, put some perspective around it. Let's just say, for example, you borrowed $400,000 on a 30-year mortgage and you got a rate of 6.375%. And then strictly for this example, you borrowed that same $400,000 over 50 years and got the exact same rate of 6.375%. Now, a little bit more on that later in the video here, where that's probably not going to be likely, but for this example, 6.375 on both, one at 30, one at 50. And you're going to see a monthly savings of almost $280 a month. Pretty significant, and obviously would make the house payment more palatable and easier to handle for sure. However, one of the main reasons that you buy a home, or at least in my opinion, one of the main reasons for buying a home, is to build wealth and build equity for yourself and your family. So when we look at it from that perspective, and let's just say we look at what you're going to owe 5 years from today, the person who did the 30-year mortgage is going to owe approximately $374,000. So they're going to earned an additional $26,000 worth of equity above and beyond whatever the home's appreciated. The person doing the 50-year will have only paid down their balance about $6,500. So they're still going to owe $393,500 approximately. Now, I had mentioned the fact that it's unlikely you would see the same interest rate on a 30 and a 50. The reason being, if you do a 50-year mortgage, there's more risk to the lender. If there's more risk, they're going to want a higher interest rate, higher yield. And you can look to what is currently out there, which is there are some 40-year mortgages that do exist. However, if you were to Google those today, you're probably looking at a rate of anywhere from 7 to 7.5% for a 40-year term. So now if you're taking an additional 10 years out, probably going to be as high, if not even higher than that 40 years right now. So if I just take that same 400,000 and let's just say I used a rate of 7.125, that only saves you about $50 when you take that 400,000 on the 30 year and the 400,000 on the 50 at the higher rate. That only saves you about $50 a month. Now, I've talked about how much equity you've built up in 5 years. I've talked about the difference in payments. Here's one other thing to factor in. Let's just say you take out the loan and you remain in it the entire time and just take the full 30 years to pay it off, never paying anything extra, just making your normal monthly payments. On that 30 year, you're going to pay approximately $498,000 worth of interest. On the 50 year, at that same rate of 6.375, you're going to pay over $930,000 worth of interest. So not quite, but almost double. Then if you factor in the slightly higher rate, which again is probably more likely, now you're going to pay, on top of that $930,000, you're going to pay almost an additional $136,000 worth of interest above and beyond that. So that's a lot of interest to pay. Not to mention the fact that I just read where the average first-time home buyer is age 40. So if you're an average first-time home buyer at 40, you buy your first house, you take out a 50-year loan, you're 90 years old before you pay that off. It's not exactly wealth building at that point, again, in my opinion. So I just wanted to share some thoughts on this, share some numbers, because again, I know there's a lot of talk about this. Nothing has been set in stone, and I'm all for finding different ways to make housing more affordable. I personally am just not sure this is the right answer. Listen, if you found this information helpful, please do me a favor, subscribe to our page here. And if you have any questions regarding getting qualified or questions around 30 or 40 or 50-year mortgages, again, 50-year doesn't exist right now, but if you've got more questions on this, feel free to reach out. I'm always here to answer your questions. Call or text anytime. You have a great day. We'll talk to you soon. Bye-bye.